For those who might not be familiar with Ken McElroy, he's a seasoned real estate investor, advisor, and author with decades of experience under his belt. His strategies have helped countless investors grow their wealth, and today we'll unpack some of his most powerful principles. And towards the end, I'll share a crucial communication tip that could make or break your success in real estate. It's something most investors overlook, but Ken swears by it. Now, if you're someone who's been thinking about getting into real estate or taking your current investments to the next level, Ken's approach might just surprise you. Chapter 1. Sales are not required. Alright, let's start with something that might sound counterintuitive, especially if you've heard the classic sales are everything advice. In real estate, sales are actually not required to be successful. Ken McElroy is a firm believer in this. You see, most successful investors focus on the deal itself, not their ability to sell it. If you find yourself having to do a lot of selling to make the deal attractive, that's probably a red flag. A truly solid deal, one with strong fundamentals, should speak for itself. Let me give you an example. Imagine you come across a multifamily property in a market where rents are rising, the population is growing, and employment is booming. Even if the property isn't the flashiest on the block, the strength of the market will make it attractive to renters and buyers alike. The deal almost sells itself because the market demand is there. No fancy sales pitch required. So here's the takeaway. Focus on finding deals in strong markets with solid fundamentals. The less you have to sell it, the better the investment. Let the market do the work for you. And remember, if you're constantly trying to sell your investment, maybe it's not the right deal after all. Chapter 2. Wealth begins with thinking. Now let's talk about something Ken McElroy really emphasizes, the power of mindset. Wealth doesn't just begin with money, it begins with thinking. Specifically, it starts with shifting from a scarcity mindset to an abundance mindset. Here's what that means. A scarcity mindset focuses on limitations, not enough money, not enough opportunities, and so on. This kind of thinking keeps you stuck because you're constantly worried about losing what little you have. On the other hand, an abundance mindset focuses on opportunities and growth. It's the belief that wealth and success are not finite, and that there's more than enough to go around if you're willing to pursue it. Ken's advice? Study the wealthy, not just their investments, but their habits, their decision-making, and their mindset. You'll find that many successful real estate investors think long-term, make strategic moves, and take calculated risks. They don't obsess over getting rich quick. Instead, they focus on steady growth and long-term wealth. Let me give you an example. Take someone like Warren Buffett. Yes, he's a stock market guy, but his mindset applies across all investing, including real estate. Buffett famously said, "The most important investment you can make is in yourself." That means continuous learning, adapting, and growing your mindset. Here's a practical takeaway. Start building an abundance mindset by surrounding yourself with positive influences. Read books by successful investors, attend seminars, and seek out mentors. The more you expose yourself to an abundant way of thinking, the more it becomes part of your own approach to investing. It's not just about having money. It's about having the right mindset to make that money work for you. Chapter 3. Market forces are stronger than the property. Let's move on to a principle that Ken McElroy stresses time and time again. Market forces are stronger than the property itself. This might seem surprising at first, but it's absolutely critical to understand if you want to be successful in real estate. Here's the thing. A great property in a weak market can fail, while a decent property in a strong market can thrive. The key is understanding that the market will often determine your success more than the condition or features of the property itself. This is why Ken always advises focusing on the market before getting too caught up in the specifics of a property. So, how do you evaluate a market? It starts with understanding key drivers like population growth, job creation, and the overall economic health of the area. Is the population increasing? Are there new businesses moving in? Is there a growing demand for housing? If the answers are yes, you're likely in a strong market. For example, take Phoenix, Arizona, one of the fastest growing cities in the US. Over the past decade, it's seen an explosion in population growth and job opportunities, particularly in tech and healthcare. Investors who bought even average properties in Phoenix years ago have seen significant appreciation simply because the market's growth lifted those properties to success. On the flip side, you could have a perfectly renovated building in a market where the population is declining and jobs are scarce. No matter how beautiful the property is, you're going to struggle to find renters or buyers. The market just isn't there to support it. Before you fall in love with a property, fall in love with the market. Do your homework. Research population trends, job growth, and economic factors. Because at the end of the day, a strong market will do more for your investment than any granite countertop or new appliance ever could. Chapter 4. Invest for the long term. All right, now let's talk about something that separates the successful real estate investors from the rest. Investing for the long term. Ken Mcelroy emphasizes this constantly. Don't chase quick profits. Instead, focus on long-term investments that generate steady cash flows, offer tax benefits, and grow in value over time. Here's why this is so important. When you're chasing short-term gains, you're often putting yourself in riskier situations, whether it's flipping a property in a volatile market or over-leveraging to take advantage of a temporary price surge. Sure, you might make money in the short run, but these strategies can be unpredictable and dangerous, especially when markets shift. Ken's approach is different. He looks for investments that can pay off over years, not months. This means prioritizing properties that produce consistent cash flow from rental income, offer tax advantages like depreciation, and have the potential to appreciate over time. It's a strategy that relies on patience and discipline, but creates real wealth that lasts. Imagine investing in a multi-family property. Maybe it's not the most glamorous investment, but every month it generates cash flow. You also get to take advantage of tax benefits like deductions on mortgage interest and property depreciation. Over the years, as the property appreciates and rents increase, your cash flow grows, and so does the property's value. It's not a quick win, but over a decade or two, it's building real, sustainable wealth. Chapter 5. Be a great communicator. Finally, let's talk about a skill that often gets overlooked in real estate investing: communication. Ken Mcelroy believes that being a great communicator is crucial to your success, whether you're dealing with employees, vendors, or investors. And it's not just about talking the talk when things are going well. It's about staying clear and transparent, especially when times get tough. Good communication builds trust, and trust is the foundation of every successful business relationship. Whether it's negotiating a deal, working with contractors, or keeping your investors informed, clear and honest communication ensures that everyone is on the same page. One thing Ken always emphasizes is the importance of transparency. If a project hits a roadblock or an investment isn't performing as expected, it's better to be upfront about it rather than trying to hide the issues. This doesn't just protect your reputation, it builds credibility. People respect honesty, especially when things don't go according to plan. Ken also suggests regularly checking in with your team and partners. It's not enough to just communicate when something goes wrong. Regular updates and open channels of communication help prevent problems before they arise and keep everyone aligned with the project's goals. Make communication a priority. Be transparent, be consistent, and most importantly, be willing to have the tough conversations when necessary. That's how you build strong relationships and a successful real estate business. And that wraps up Ken Mcelroy's secrets to real estate mastery. I hope these tips gave you some valuable insights to take your real estate game to the next level. If you found this video helpful, do me a favor, hit that like button, and don't forget to subscribe to the channel for more tips on real estate, investing, and building long-term wealth. And hey, if you have any questions or thoughts, drop them in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you in the next video.